What is subrogation? Subrogation is a term describing a right held by most insurance carriers to legally pursue a third party that caused an insurance loss to the insured. This is done in order to recover the amount of the claim paid by the insurance carrier to the insured for the loss. Subrogation literally refers to the act of one person or party standing in the place of another person or party. It effectively defines the right for the insurance company both before and after it has paid claims made against a policy. Also, it makes easier the process of obtaining a settlement under an insurance policy. When an insurance company pursues a third party for damage, it is said to step into the shoes of the policyholder, and those will have the same right and legal standing as the policyholder when seeking compensation for losses. If the insured party doesn't have the legal standing to sue the third party, the insurer will also be unable to pursue a lawsuit as a result. How subrogation works. In most cases, an individual's insurance company pays its client claim for losses directly, then seeks reimbursement from the other party or their insurance company. In such cases, the insurance receives prompt payment, and then the insurance company may pursue a subrogation claim against the party at fault for the loss. Insurance policies may contain language that entitles an insurer, once losses are paid on claims, to seek recovery of funds from a third party if that third party caused the loss. The insured doesn't have the right to file a claim with the insurer to retrieve the coverage outlined in the insurance policy or to seek damages from the third party that caused the losses. Subrogation in the insurance sector, especially among auto insurance policies, occurs when the insurance carrier takes on the financial burden of the insured as the result of an injury or accident payment and seeks repayment from the at-fault party. Example of subrogation. One example of subrogation is when an insured driver's car is totaled through the fault of another driver. The insurance carrier reimburses the covered driver under the term of the policy and then pursues legal action against the driver at fault. If the carrier is successful, it must divide the amount recovered after expenses proportionately with the insured to repay any deductible paid by the insured. Subrogation is not only related to auto insurance and auto policy holders. Another possibility of subrogation occurs within the healthcare sector. If, for example, a health insurance policyholder is injured in an accident and the insurer pays $20,000 to cover the medical bills, that same health insurance company is allowed to collect $20,000 from the at-fault party to reconcile the payment. Subrogation process for the insured. Luckily for policyholders, the subrogation process is very passive from the victim of an accident from the fault of another party. The subrogation process is meant to protect insured parties. The insurance company of the two parties involved work to mediate and legally come to a conclusion over the payment. Policyholders are simply covered by their insurance company and can act accordingly. It benefits the insured in that the at-fault party must make a payment during subrogation to the insurer, which helps keep the policyholder's insurance rates low. In the case of an accident, it is still important to stay in communication with the insurance company. Make sure all accidents are reported to the insurer in a timely manner and let the insurer know if there should be any settlement or legal action. If a settlement occurs outside of the normal subrogation process between the two parties in a court of law, it is often legally impossible for the insurer to pursue subrogation against the at-fault party. This is due to the fact most settlements include a waiver of subrogation. Benefit of subrogation. In insurance, subrogation allows your insurer to recover the costs associated with a claim, such as medical bills, repair costs, and your deductible from the at-fault party's insurer. This means that both you and your insurer can recoup the cost of damage or harm caused by somebody else. It also means improved loss ratios and profit for your insurer. Waivers of subrogation. A waiver of subrogation is a contractual provision whereby an insured waives the right of their insurance carrier to seek redress or seek compensation for losses from a negligent third party. Typically, insurers charge an additional fee for this special policy endorsement. Thank you.